Good evening, bandits. How you guys doing? Say hello to Mitchell. He's in the house tonight.
Hey everyone.
He's gracious enough to stop by and gracious with his presence, and he's been a key part of the Discord room. If you guys haven't seen the show, he's been on it. I think once before with CT. You, me, and CT talked, and dude, that show. I think we went for a while on that one. We were having a good time. So I'm glad to have you back, brother.
Thank you. Appreciate it. Sorry, I was getting some echo, but I realized it's just coming. I had the YouTube volume turned up, so
Oh, you're
I
good,
just
man.
turned that down. So
Yeah,
there we
that
go.
that delay. But dude,
Yeah, I
it's
know.
it's
There's always
super
there's
excited
always a
to
technical error.
have you back and
Thank
have
you.
you on
Appreciate it.
here. And tonight, guys, we're going to field any questions. I'm going to talk about the day of the week, talk about some with Mitchell with how he's been doing and growing as a trader, things he's noticed that identifies that he has identified strengths maybe in himself or in his psychology and when he's doing well, when he's not. Talk about some of that stuff with me too. Any questions you guys have for us during the chat? We're just kind of midweek review. We're talking about the market some. What up, Elizabeth? And all that kind of stuff. So Mitchell's a key part of our community. He's been in the Discord server since we've launched it for a while, and I'm looking forward to kind of getting caught up on your journey, man. So with that, let's kick it. Let's kick this intro. There we go. Oh, so what up, Ralph? So let's see. Hey, what up? What up, Matt? How are you guys doing?
Not
How
more.
was your guys' day today? Hopefully you guys survived FOMC. I don't know. I was saying to Mitchell right before we went live, I was not like I was on the mic this afternoon and I was doing a little bit better then when I was kind of focused in and scalping. I doubled, almost tripled, I think, my day early, but I feel like I was not playing well early. And I don't know that I wasn't like, if I just wasn't sharp or I didn't sleep good or I just woke up not as rested, like I woke up sore today. And it was just a weird, like I felt like I just missed opportunities that were there. But all in all, it was a tradable day. Like it was a super tradable day. And I did pretty good later in the afternoon, but early on, it seemed like it seems like the market has been tradable if you're in the right headspace, kind of, and if you're identifying plays. I don't know how you've been doing with it all, Mitchell.
Yeah, exactly. I felt the same way. I felt better today, but Monday and Tuesday, I was just really tired, doing a lot of remodeling right now, installing windows and stuff. So I just wasn't getting a lot of sleep. And like you're saying, anytime I'm not coming in the market open like super focused, I just have a really hard time timing entries and exits. And I just squeezed by small green days Monday and Tuesday. So I was grateful for that. But yeah, like you're saying, it's just in this current market, you have to like come in really, really focused. And there are good setups, but usually by 11 a.m. Lately, the action's kind of done for the most part. The ATR drops down super low. And unless you're like waiting for a bigger retracement for a longer hold or more of like a fib style trade, usually, it's best to kind of lock it in by 11. So if you're pretty tired in the morning, it's really easy to miss that like, quick little opportunity to make a few trades and make your money and get out. You got to really be ready in a, quick moment.
You do, especially with the quicker scalps. And what up, Eddie? Hey, Dan, how's it going? Good to have you in the house, Eddie. You had a killer call out in Tesla today. I don't remember. Like, I think it
It was a breakdown. It was a
was it a,
portal to a 15-minute breakdown. I remember I took it too. It was really nice.
yeah, he called it, and it was just like a straight money play. I don't remember. I think it was like a point or two or something if he took it and held it a 15-minute into an hourly. It was like a portal into a portal. It was like freaking warp drive. Taco money, man.
I'll mail you some tacos
Mitchell
in the
was
mail.
saying that we need, was it you that was saying we need college football stickers?
Oh yeah, we need like those little those little stars they put on their helmets,
Yep.
every time they get an interception or something. We all deserve those.
We
Every time
need
we get a good call out.
we need to find a way to do that, but we'll do it with
Put them on
tacos.
our headset.
Little stickers. I'll mail you guys stickers. What up, Alan? So I'm gonna buy a bunch of taco stickers, and we each get a board. And if you do a good call out or you do something like that, somehow you get like a taco sticker sent to you for your, your good call out. And if you have a bunch of them, then the community can vote to remove a sticker. So it's like, yo, Gator's been off lately. He keeps calling these things that aren't
Yeah.
it. You lose a taco for that one, Gator.
Yeah.
I feel like that would be fun
Yeah.
until somebody gets butthurt and they start losing.
Yeah.
Now, how have you? So here's something that gets to me. And JR hit this pretty good the other day, and I've said stuff similar to it. But so you talked about logging out, and CT is like the master of only trading for 45 minutes.
Yeah,
It's
I'll
like
say
his
I'm not that good at it.
no, it's like I'd like to. Dude is something. How do you have you experienced fighting FOMO to trade all day? Like my struggle is I know how I trade and the moves I can make money on. And if I miss what I think should have been, you guys size it how you want, a $5,000 day, a 10,000, a $500 day, a $1,000 day, whatever your size is, a $50 day, it doesn't matter. And I'm like, man, I know how to trade this, and I'm mistrading this. I often want to stay and trade more because I didn't execute to the I didn't hit what I know I can within that move. So I'm like, I almost want to
Exactly.
stay in force trades. Have you kind of come through that and worked through that as in your growth?
Yeah, I mean, my focus this last like couple weeks is really just trying to be grateful for even, days where you maybe didn't make as much as you want. If you're green, a couple $1,000s, that's like incredible money. The amount of like going back like a month, there was like a 2 week period where I was, really nice green in the morning. And then in the afternoons, I was just giving back a huge portion of it constantly, like almost every day. And I got so frustrated. And I realized like you're saying, because I didn't, trade perfectly in the morning, I was constantly putting this pressure on myself, like, oh, I need to stick around in the afternoon and really just take advantage of every possible opportunity that may come in the day. And it was resulting in me constantly giving back in the afternoon. So I'm just really trying to focus on being grateful for whatever I'm up by, usually 11:30, and trying to lock it in. I mean, obviously today there was Fed news at 2, so you stick around a little later, but normally it's best just to lock it in and not put yourself through the possible stress of giving back. It's a terrible feeling when you do.
Yeah. There's only one, like, if you guys notice, our Discord chat drops off, like, after the first hour. It's not because, I mean, honestly, it's because of what Mitchell's saying. It's like, I'm not here. And if I am, I'm, like, not trading. I might be at my computer because I'm playing a game or I'm drawing lines or I'm answering emails or I'm doing something else. But, like, we're bandits, generally speaking. We can trade throughout the day, but you just get so exhausted and you get worn out and you get decision fatigue and you try to make too much and do too much. And as soon as I start doing that, it's like Mitchell saying, I'm noticing it's like last month I had a green month. Maybe I can't remember if it was this month or my last month, but I was talking to my dad about how I was trading. And I told him, like, I think it was last month. I'm like, I'm having a green month, a pretty green month. I've given back about $40,000. Like, there were some days when I did that. It's like I had a green day, like maybe a $2,000, $3,000 green day, but I made, you know, 40 grand or I made 30 grand that day. And we were talking about, it's a joke, DB from Discord earlier, but and in this week or something that I gave back, when did I give all this money back? It's like, oh, you don't think about it, but I gave such a high percentage back from just not taking those first really few good runs and then just locking it in and minimally trading later in the day. And if I trade, doing kind of, I don't say over traded, but I was trading more today to talk through entries and stuff because I was on the mic and I was sitting there. But, I'm sitting there all day trying to do stuff and manufacture a trade when you're in the middle of a move or you're in the middle of a slow grind and you're not at an entry point is just absolutely an account. I'm not gonna say killer, but it'll eventually be a killer, but like an account flattener or like an account drag, I guess you could say.
Yeah. Yeah, the amount of times I've been up like really nice in the morning and then give it all back in the blink of an eye and then like stop myself and think like, wow, like why was I not grateful for being up that much money in one day? It's just crazy how you get in this mindset where you're never satisfied, and you just keep going and going. At some point, you have to like stop and protect the money you've made in any given day because it's life-changing money. You're making more than vast majority of people, and you got to really treat it like a business. You have to protect your assets once you're up, and it's something I feel like it takes a long time to get to that point. Like, someone like Kelly, where they're willing to walk away when they know to walk away. But I think I'm hopefully getting better at that after going through a period of constantly giving back. So you got to really focus on being grateful.
Do you feel like you're thriving or surviving or in the middle? I don't mean necessarily like at this exact point, but generally in your trading, do you feel like, you know what, I'm kind of coming into my own. I'm identifying things really, I feel really confident in where I'm at. Like I don't feel like I have to, make whatever it is. Like, are you getting to the point where you're there, or have you been there for a little bit? Or are you still trying to get there?
I feel like it's a blend of thriving and then having a random tilt day every few weeks that I just get back a huge amount. So
Same.
I'm really trying to work on preventing those. If I could stop myself from that, then I would be full on thriving, overall. But it's a repeated pattern where I'm doing really good, and then I have like a tilt day once every 3-4 weeks that gives back a huge portion of what I made that month. And so if I can just stop that habit and, recognize when I'm kind of in that toxic mindset, I think I would do way, way better. So that's yeah, something I'm focused on.
I wish I you said something a second ago, and it got me thinking. And JR's talked about this in a way, some of the afternoon stuff and the identifying the entries and the trades that you take and where you're at in a move has helped me there because you're not necessarily wrong trading for most of the day. Like, I mean, I don't think you should sit at your computer all day, but because sometimes there's trades to be made, but you almost have to change what you are. Yeah, Jason, that's a lot of us. And if you guys have questions for me or Mitchell, send them, or stuff you want us to look at, charts or anything else. But there are trades to be had. But what are we doing early? Like we're identifying aggressive bull or bear moves, price action in the market. Whether it's like falling wedges, the bottom of 2 minute green takes reds, like points that we're looking to enter, and then what changes later in the day. It's just, there are still strategies that you're looking for, but you have to change from like taking 30 trades in the first 15 minutes to taking, 5 trades for the rest of the day almost, if you're going to sit there. And if you can't do that, then you really can't trade the afternoon well in most
Yeah.
names, in most days.
Yeah, exactly. Like in the afternoon, when I do stick around, if I trade successfully, it's always longer holds, trading off bigger levels, pivot lines, fib retracements and stuff. But in terms of like the hyper scalping that we sometimes do in the morning, lately after like 11 a.m., that just doesn't work. It's really hard to time entries and exits. The ATR is so low that if you are going to stick around in the afternoon, like you're saying, you have to be way more picky, take less trades, take less size, hold for longer, and trade off bigger time frames and bigger resistance and support levels. And then I do think there can be some really successful trades and opportunities. But in terms of hyper scalping, you have to kind of get out of that mindset by after the morning's done because it's really hard to be successful with that in the afternoon with the ATR so low.
I obviously have kind of, I don't want to say push, but have tried to transition video wise a lot to the fib stuff and stuff like that. How have you, because I get messages about, oh, the C strategy's dead or this thing's, is this happening? How have you managed to, it seems so well, transition from the C strategies to then adapting part of that, and you still you get out quick sometimes, or you're not looking for the whole move, but it does seem like sometimes you're looking for more of a move. Is there something you've gone through to help kind of shift you or train yourself to hold things longer other than I want to make more money because that's not going to work. So like what have you actually, are there things you've done that you think could help other people um, hold?
Yeah, I think with fibs, like not only are there really, really good trade opportunities trading off fib lines, whether that's the 38.2 or 50% or 61.8% retracements or something like that, and then targeting extensions. But even if you're not trading off the fib lines, like using that for your exact entries and exits, I think every trader should be drawing those lines so that you know where you are in a move. Like if you have like a big leg and then you're pulling back, you can fib that leg, I mean, and you can see, okay, well, just because we're pulling back right now doesn't mean I'm switching to bearish on the name. Like I see we're still within a retracement level and I'm expecting the possibility of another leg soon. And just by having all those fib lines, you can kind of gauge where you're at in the market, whether you're expecting another leg, whether to remain bullish or bearish on the name. And so I've used them kind of as a blend of gauging where we're at, but also I do take trades off of them pretty regularly. But I've noticed in terms of like getting an entry off a retracement and then trying to hold for an extension, those work really well when the market is trending. But like I mean, it's worked a lot better the last couple weeks on some days.
Mm-hmm.
But when the market was really choppy, especially on Tesla and stuff, they tend to not work that well. But when we were in like a bull market in last year and then a bear market at the beginning of this year, if you go back and fib some of the legs certain days, like those trades were just money like over and over, but they haven't worked as well when the market's been choppy. So I'm trying to practice to know when to like hold a trade off a fib play and when to take the money quick and when to know to like to hold a runner for a further extension and try to gauge a general market sentiment on that day and whether people are thinking it's going to run, and those tend to be the days where they work really well. So it's really, you got to really know like when to hold off them and when to just take the money quick, because it's definitely not an exact science. It's pretty difficult to gauge at times.
Yeah, unless you're a person that's like, you're okay, so I'm buying at the 61% retracement. It hit the 21. You see Tesla here on my chart. And it's like, oh, I'm going to buy here. I'm going to put my stop at the 50% retracement. And I'm going to sell half here at the 100%. And then I'm going to wait till it hits the 127. And if you're willing to wait all day on some of this stuff, and it doesn't bother you holding Tesla for an hour and a half, like a lot of times this stuff works, but it doesn't always work how we want it to work, and that's kind of what I've discovered. It a lot of the names work and the stuff works, but you have to trust it so much and do it really identify, like you're saying, the market is in the trend and the cues aren't hitting resistance and we're not on a third or fourth leg without some serious consolidation, and like that there's not a lot of other stuff going on to really get to a point where you just trust it to go right there. And sometimes it doesn't go right there. Sometimes it takes an hour to get there or 30 minutes to get there. I don't remember which one we called today. Was it Tesla on a short? It was this one. I know we did this one because I did this one. I know I did this one for a short when it pulled up here into the 21 and took it short. Entry at 12:56, and I think I entered at 12:55 and 45 seconds or 53 seconds, and took this move down. And you said, watch out, the 5-minute 21. It hit the 5-minute 21. I think I sold half and then sold the other half at the 127.
Yeah.
There are trades like that midday that work that you can find.
Yeah, I think with these fib trades, like if you have a great entry, you buy off a retracement, and you're targeting the 127 extension or even the 161 or something. I think the best way to do it is the way Kelly does it, and just to take profits on the way up, and always to, if you're pretty confident in the trade, to hold a runner for those targets. But I mean, there's been times where I have like a perfect entry and it starts going and I'm up like a couple points in the trade. I'm like, you know
Mm-hmm.
what, this is going. I'm going to wait for the 127 and take like my whole position there, then maybe keep one contract for the 161. and it gets like pretty close to the 127, and then the market just reverses and it comes all the way back down to my stop. And I was up, it's happened when I was up like 5 points before, and it's like a terrible feeling to have been up 5 points on the trade, not taking any money, and have that come back all the way down and hit your stop for a break even or a small loss or something. So, if the trade's working, like, you really, I think, have to take profits a little bit at a time on the way up, and then finally when it hits that target, you can take your final leftover position. But I don't know, I think it makes it way less stressful if you do it that way versus just holding it all for, like, a target that's pretty far away.
Yeah, it's very like there's nothing more like mentally defeating than when that happens. Like it's happened to me so many times. I'm right there with you. Like it's so normal. It's like, oh, I'm up like, I've got 50 contracts and I'm up like 3 points on this. This is really nice. Or usually not that much, but it's like, oh, I'm up 50 cents or $1 on these Qs. It's like I should probably take some profits off here. They're gonna go up another dollar or two. I'm just gonna hold, and then they drop, and it's like, oh man. It's like
Yeah.
you had 2 grand, 5 grand in your pocket, and you just let that go away because you wanted the whole move and you didn't pay yourself, and it can set you kind of toxic. And I think it's important to realize that if you start doing that, and it's a good trading system, but you have to trust it and you have to have a system that keeps you from getting toxic when you do it. And that will allow you not to get FOMO and be mad, because you'll just understand that sometimes like you're going to catch ones that you hit home runs with, and then other times you're just going to take half, and then the other half you're going to get stopped out on, and that's just part of the system. The worst thing you can do is be like, well, I held it all the way there, but because of the choppiness and all the stuff in the middle, I got shaken out and lost, you know, and then I got mad. It happened to me on Tesla this afternoon. I called Rose is like, you probably went too heavy. I'm like, yeah, I did. I don't remember when she told me I went too heavy, but it was somewhere in, I don't know, this was 2:30. It wouldn't have been here. Might have been a 1 minute. I don't remember. You guys might remember when it was, but yeah, it was something, and it was like it went off the 21, and then it shook back down into it, and actually tagged. I think it was here. I took it here, and I got shaken out. Oh, here it was. I got shaken out here when it came back into the 21. Normally, I wouldn't have gotten shaken out here at the 326 candle, and then it just boop and went right up. And I liked this setup. It was the first time it tested the 21. I bought down here, and then it went all the way up. I was fine. It went down. I took it like I'm like, whatever, I'll take a 10-cent win. Got shaken out. Shouldn't have done that. And then boom. It's the name of the game sometimes. Like, it's not fun, but unless you're just super, until you get that super conviction, it happens.
Yeah, I'm seeing this question by Jason here, if
Hmm.
you want to address that.
Yeah, yeah. And then I'll hit
Um,
Matt's after you get that one.
sure. Yeah, so that's something I've definitely adapted to, and I know me and Gator were talking about that before the show started. Like we're saying, last year when it was a bull market, different kind of setups and breakouts were just working over and over in the stronger months. And then when it was a bear market earlier this year, different setups, and breakdowns were just repeatedly working. But lately, like if you look at the daily charts of things like Tesla, we've been in such a chop zone. I mean, we're starting to break out a little bit now, but we were in a chop zone for like over 2 months straight. And when you're in a chop zone like that, breakouts tend to not work. And a lot of times you'll notice on longer time frames, whether it's 5 minute, 15 minute, hourly, that it'll print like a few cents over that and whip down. And market makers are just basically taking out everyone's orders who are buying at right at the trigger. And so we're always trying to kind of find area to buy that you're minimizing your risk. And so that you're not, because when you buy right at a trigger, if it fails and starts whipping down, not only is it whipping down and the option's losing value, but you have a bunch of people panic selling at that moment. So you're likely not going to get PI. You're going to get a terrible fill. And that's when you can lose a lot. But if you're waiting for a setup like that to fail and you just play the reversal and kind of get in the head of how the market makers are playing it to take out people's or retail traders orders in that moment, then I think it can be pretty successful. So I think basically we're just trying to get in the mind of market makers, and we're playing the reverse of what some more retail traders are thinking might work in that moment, coming through an hourly breakout, when in reality they're going to print 10 cents over and then whip down the other way. So you're just kind of playing the opposite of what a lot of people are expecting in that moment. And that's all through just tape reading. You wait for it to trigger, you watch the tape, and if you don't see, if it's a breakout, if you don't see a lot of buying in the tape, you see it stall, and then you see the bid dropping and some red tape come in, you just jump into the reverse, and that can be a really good entry for a scalp the other way.
Yeah, I mean, look at this on Tesla here. Look at this first 2 minute 21. Like, I'm pretty sure we played this. This might have been around when CT quit. I think we caught some of this, and he was like, okay, I'm done now.
Are you looking around 10, like 44,
10:40,
10:48?
yeah, so 10:44. So what Mitchell's talking about, let's demonstrate it in a picture. Okay, we hit the 21. We pulled in. All right, let's say we didn't buy this candle. We wanted to buy it. So here's one way we buy that is like, oh, we're down here. All right, this candle opened. All right, we start ticking up a little bit higher, and we're like, okay, I'm gonna get in down here, and then my stop's right here. Why? Because if this happens and we pop up here, I can sell if I want to. I either can set a stop down here with minimal risk, so this doesn't shake me out, and I can hold for the target. So there's two ways to trade. There are more. There are two main ways to trade. And Mitchell, you might, I think you would agree with this. There's kind of what we do, the hyper scalping, and we do a mix of this and longer term stuff as far as day trading. Or there's the kind of Kelly fib or measured move trades, or wait for this level to hit, supply demand zone trading. But all of it is basically like you're either taking the quick little bit of money that you get on these pops, or you have a bigger, longer target. So if you're quick scalping, then you want to time your entry that's going to allow you to hold the chop before we take off. Because this is a 2 minute chart. So we sit here on the 21 from 1044 to 1052. So almost 10 minutes of sitting on the 2 minute and all this kind of choppy action. So you probably lose some trades in here if you're trying to hyper scalp every 1 minute breakout, 2 minute breakout, 3 minute breakout. But
Exactly.
if you wait, hang on, kids, making sure I forgot that I was supposed to bring the monitor in here with them and I didn't. So hopefully I don't start screaming. If you're watching this and you know where you want to buy, that being the 8 or the 21, and then it goes down and it starts ticking up, you take a small entry, your stop's down here, that's minimal risk, and you're not just front running nothing, you have a know your limit 21, or you have a support level, and then you can take this quick pop and take the money, or you can hold it to a target, whatever you want to do based on the type of trade, a target, a bigger target or a smaller target trade. And then it pulls back in and you can be like, man, all right, we're down here again, let's see what it does. Hey, it starts taking off, it starts taking off, you can take that and then hold it maybe the second time, give it a little bit more room. Or maybe you get shaken out here again and you're like, I don't like that, where do I want to get back in? Or you miss this trade. And so instead of, let's say you miss this trade, because this is what a lot of you do. I say that, I do this too. You miss this trade, it goes up. Okay, you chase it up here as you break out. This is only like 50 cents. And then it whips down on you. And now you're down 60 cents, a point, 50 cents on your Tesla contracts, and you're pulling back in and you're like, oh crap, this is going down. You sell, and then this happens and you get FOMO. If you realize, hey, I missed this here, I'm gonna wait. All right, we pulled in. All right, I'm watching this candle now. All right, so we opened up. All right, we consolidated. And not only that, we consolidated for like 2 minutes. If you were to look at this on like a 1 minute chart, we consolidated for like a minute or two right here. Okay, I have another entry now. I still think we're in a bull pattern. We're at the bottom of like a 1 minute candle. We're going to start ticking up. I'm going to enter here. So now you're not getting shaken out at the trigger up here. You're getting shaken out near the bottom of these candles, and you have an easy stop that's not in the middle of the explosion of volume, which is jumping your options in price, which is giving you a bad fill. The IV drops off, your volatility drops off, and you lose a point or two on this small drop. And instead, you just buy at the bottom of the candles in the middle of a bull move. if I, me rambling to say what Mitchell said really quickly, I'm trying to elaborate it on it on this picture here.
No, yeah, it's a perfect example. It's like if it comes down to the 2-minute 21 and it's the first 2-minute 21 of the day, if you just buy exactly as it hits the 2-minute 21, sometimes you can do a hyper scalp as some buying comes in. But aside for, for in terms of a longer hold for another leg, if you just buy right at the 2-minute 21, you have to always be in the mindset that the market makers are going to do everything they can to eat up some of the stops of retail traders before running it for another leg. They're always trying to, they make a lot of money eating up orders from retail traders. So you have to try and buy at the bottom of ranges like that. So you minimize your risk, you minimize the stress of holding, and you're not risking a whip down as much as buying like right as the breakout is happening. So instead of like waiting for the 2-minute breakout to happen and buying right there, I much prefer in that exact scenario to wait for it to come down to the 2-minute low, be watching the tape. And if it holds that low, then that's my entry. Like ideally it prints 10, 20 cents under that low and then pulls back up to the trigger and you hop in as that's happening. Or even if it pulls down to the low and doesn't trigger or print through it and holds it, or maybe comes 10 cents from it, that could be an entry too. And you tend to get better PI that way. It's a lot less likely to whip down and it just makes it less stressful. If you're buying right during the breakout, a lot of people are buying right then, so you're less likely to get PI. And like Gator was just showing that example, you can have a hammer candle where it whips back down, you stop out, they eat up a bunch of stop orders, and then it runs right after you get FOMO, and then you're toxic. So in a bullish setup like that, where you're watching for another leg, you should always be trying to, if possible, buy at the low of like a 2 or possibly even 5-minute range. And that can be a really good entry. Set your stop a little bit below that, and you're looking at like a small loss minimum if it doesn't work and a huge gain if you do get another leg, versus taking 3 front run losses before finally having a trade that works.
Yep. And the other way, which is you don't care about the stop as much because you have a massive like 4-to-1 target type thing, as if you're Kelly and you're like, hey, if it does a green takes red, my first stop is day highs. So the first green takes red is here. It goes, it pulls in some, and then it hits target, the first target. So second, if you have a large target that's defined and that you can get, there's nothing wrong with holding. But if you are looking, and this is the key part, if this is what you want to do, which is hyper scalp a breakout for 50 cents in Tesla or 25 cents or a point, then what you're looking for is the timed entry that you don't get shaken out on, because everybody gets shaken out so much. And you can even see that here. Like if you thought Tesla was going to continue to go up, if you were buying every breakout up here or false breakout, what's happening? If you're like, oh, it's going now. It's going now. It's going now. It's going now. How many losses are you going to take in here?
Yeah, exactly.
But if you're like, oh, hey, it pulled down. Here's a good double bottom. All right, let's wait for it to come back down near there. It's like, oh, it started pulling down again. All right, below the 21. Oh, we popped up. All right, hang on. So we have a higher low. All right, so if we get down near this low or a little bit higher, I'm going to get back in. All right, we're back down here again. We're starting to, let's try it a little bit longer. All right, let's sell into this pop. There's 30 cents or so. All right, let's wait for it to pull back down again. All right, it pulled back down again. All right, let's look for it to pop up. And you're generally not trying to catch this, but you're just not trying to buy here at the breakout. You're trying to buy at like at a level of kind of support or something, And it just gives you that better timing for your entries, like Mitchell was saying, and it really helps you minimize losses. The downside, and I've done this, I'm sure Mitchell you have too, is if you get to like tunnel visioned and you take a million back-to-back losses on your front runs on the wrong side, you can really start like hyper scalping your way into a loss at the bottom of candles.
Yeah. Oh no, there's definitely times where you take like 3 front run losses, it finally works, but you add it up and you lost overall. So, if fills aren't good and stuff, you have to always be careful with any kind of scalping strategy like this. But one thing I was going to say is what's nice about buying at the bottom of a range like that on a setup like this is you buy at that, when it held that 2-minute low or printed right below it and then held it.
No, I didn't.
That's your initial position. that's your initial position that you're holding for another leg. But then as like it comes up through a 2 minute or 5 minute breakout, you can do like a quick hyper scalp with a different position. And as it goes through that breakout, sell that almost immediately and be making money on hyper scalps while you're still holding that other position that you're planning on catching the whole leg. So sometimes I'm like, just have that position that I'm holding with my stop in place. So I'm not worried because I know exactly where I'm going to sell if it comes back down. And then I'm still like hyper scalping breakouts on the other end and making money, and then selling those really quick. So that's one of my favorite things to do lately.
I like to do that, what you're saying, with two different contracts. So like I would do that with like an in the money or yeah, out of the money contract that's a lot cheaper. So it's like I'll go, 5 contracts, 6 contracts away from the strike, 4 contracts, and then you're not getting that initial pop, but you just open up that position, set your stop loss, move it down like the window, and then especially if you're really confident in the trade, and then if I'm looking for a hyper scalp, I can get a contract that's out of the money that's moves a little bit better, and I can kind of just hyper scalp those for part of the move. If I do that, I usually do 2 contracts. It's like slightly easier for me to like mentally do it that way.
Yeah. Yeah. No, if you have huge size, it makes it very hard to be trading with two different, strategies. You have to definitely keep that in mind. The more size you have, the harder it is to like coordinate everything and you start to panic sell things and stuff. So,
I'm trying to think through Matt's question. So looking at it, um, about when a sequence on when to take something and when not to take an eight. I mean, that's like I did like 4 shows on tape reading, and I know I cover it in more detail there than I can here. Um, First is the fib. So first would be, and I'm Mitchell, you might have an answer for this too, but first is the fib. It's like, if you're like, when are you looking for an eight after this is a 1 minute, after we hit the 127, maybe, of this leg. I guess this one you could do a little bit lower, but, after we hit, the 127, I'm looking for a moving average. After we hit the 161, I'm looking for a moving average. I'm watching the tape when it hits the moving average. When we hit it, is there buying coming in? Do we pull down and it just shows like, all right, tick, 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 tick. Like, oh wait, there's buyers. It like hit a wall. Okay, we're not just dropping. What's the rest of the market doing? Where's the rest of the market in this sequence? Are we in a very active sequence? And is like, where are we? Have we already hit and failed? So for instance, it's like here in this 1 minute 21 in Tesla, it's like that's your first 1 minute 21. You take it, it didn't just rocket higher, but you're also at the end, or this isn't the first 1 minute 21, that's all the way up here. It's a 1 minute chart. Zoom out and scroll down. Your first 1 minute 21, your first know your limit 8 almost always takes for me. Your second 21, look where the second 21 comes up here at 1032. We're already pretty much past a move. We're starting to turn back down. We're probably in a consolidation mode. We pulled in and then we failed to break higher, so now we're pulling in. All right, what happens when I hit, I come back up, I go below, and instead of coming above and going higher, I fail the 21. All right, I'm not a big fan of it now. Now we're just chopping around. Now we're going lower. As a matter of fact, this might be this. Yeah, look at that. If you look at the reversal, look what happens. Look how fun this is. Whenever you see the first time, this is a 1 minute 21. I guess it worked here too. Like, look at that. Pull below the 21, came back up, and there's your next leg down, right to the 127. I don't even think I traded that one today, but yeah, there you go. And then you just sell there. So it depends on where we're at in a move, and I covered this in a little bit of detail generally in the during the move. If it's very bullish early, I'm taking the hit every time. If it's just riding the 8 up all day, I'm taking it every time. first tests I take, and then after that, I'm more sus of them. Especially if we've hit the 127 and the 161 of the first leg, if that kind of makes sense.
Yeah, definitely. If the first leg, if you hit the extensions of the first leg, I'm always a lot more suspicious that it's going to keep running. But I mean, one way to know is like you're watching the 1 minute eight, and it's, let's say it's a bullish day and the stock's moving up, comes down, touches the 1 minute eight, and then keeps moving, comes down, touches the 1 minute eight, keeps moving. I mean, at that point, I'm just assuming, well, the next one's going to work, and maybe it does. Maybe four work in a row, maybe five work in a row, but at some point it fails, and when maybe you play it and you take a loss, or maybe you didn't play that one. But once it fails, then you immediately go into the mindset, okay, maybe we're going to have a bigger pullback here. And I guess another way to gauge it would be if you have a leg up and then we pull back, let's say to the 1 minute 21, and it starts moving off of that. If you then fail to put in a higher high off that 1 minute 21 before flushing back down and failing the 1 minute 21, that's always a sign that, okay, we're pulling into a deeper retracement here. And then when that happens, I usually wait for either a 2 minute 21 or possibly even just wait for a bigger retracement, to 50% or whatever it is. But like he was saying, it's really like in the tape reading when it pulls down to these moving averages and retracement levels. Like if you're watching the tape and you immediately start to seeing, the bid rising and some buying coming in, well, then that level's being respected and you can, do an entry off it and trade it. But if you come down to that and you see it's still a battle of the buyers and sellers, or the selling still coming in, you just have to kind of ignore it and see that that level's not a support level in that moment and that the market's reversed. So yeah, I would definitely recommend watching his tape reading videos, because that is definitely probably the most important thing over the levels.
And you said a key. If I took all my videos and just cut it down into like a sentence, it would be until they don't work. So it's like the first time you get a Mark 1 that doesn't give you a new high, the first time you give you a know your limit 8 that doesn't give you a new high, the next time you get a 21 that doesn't give you a new high, that's when to me you need consolidation or a larger time frame. So it's like, yeah, I do the 1 minute 21 and the 2 minute 21. Yeah, but they look like they failed and were really extended. We need a 2 minute now. We didn't get a new day high break off this know your limit 8 here. If just looking at Tesla right here at the, if you're looking at the 1228 video, like as it broke off the 8, look what happened last time you hit the 8. Boom, new leg. Next time you hit the 8, what happened? Didn't get through day highs. All right, we're short now, guys. We're not going to go long. Reversal bar. You could almost short this. Maybe you shouldn't, but we're going down. All right, we need a 21 before we test. All right, we test the 21. Now we get another test of day highs. We barely break day highs, and then we consolidate into a consolidation mode for a couple hours before going higher. And so when you fail a
Yeah.
new high,
Are you looking at that 1029 candle today?
10, yeah,
On 1 minute
1028,
chart?
1029. Yep, 2 minute chart and
Yeah,
1 minute
that's like
chart.
a perfect example. Like it started to do another leg up, it failed to make a higher high, and then you put in a pretty big red 1 minute candle and started flushing, and that should instantly be a sign like, oh, this is probably going to retrace more here. We're not going to immediately run the day highs, like we failed to push day highs right there.
Yep. And that's like, yeah, you could have made money when you took it down there, but it's like, oh, we didn't go up. All right, we're done. And then you wait for the next thing to test. You wouldn't take this one because it cut through it and it never really got back. Maybe you take a scalp there and a quick loss, and then you leave it alone. And you're so close to the 2 minute 21 there, I think actually that you wouldn't have taken that anyway. But yeah, that to answer your question, Matt, that's the answer. And if you want more in detailed, I did 4. I'll put them in a playlist. But I did 1 with JR, 2 with JR, and then I think I did 2 or 3 myself on it. And those kind of go into a little bit of that. I don't know what EDM orders are, Marco. I'm not sure.
EDM orders.
Yeah, I'm not sure. If you wish to elaborate, I guess I could Google it. I know we just do market orders.
Yeah, I just Googled it. I'm not seeing anything.
Yeah, if you want to read.
Equity derivatives market, is that?
Maybe.
Oh, that's in there.
And then Mitchell Graff asked you a question if you want to hit that one.
I watch the Prince, the bid, and the ask. If I would say I watch the Prince and the ask the most. Um, but I watch the bid too. But it's really watching like the velocity that comes in. Um, you'll notice like when you hit a support level, and if you're trying to see if some buying's going to come in because you want an entry long or something, you'll notice like not only does the bid and the ask start rising, but the velocity starts to pick up and the tape starts speeding up. And you can start to see some momentum to come in. And you know, in that moment, okay, the buyers are winning in this exact moment. And that's when you jump in. So it's really hard to, you probably said this on a show before, it's really hard to kind of explain. I mean, you really has to come through experience. Like it just comes from watching the tape on specific names over and over, day to day, for months and months. And you start to recognize like how these names trade when they're choppy and how they trade when there's momentum and there's a lot of buying or selling in the tape. And you just start to recognize patterns of how it moves. And it just becomes kind of second nature to see how it's moving. So there are, videos you can watch that will help you understand it, but it really, the best experience is just to sit there and watch it on any given day through different setups and to watch how the tape moves.
Yeah, there's nothing that you could watch. I think all the videos out there, but honestly, I think it'll feel like an alien language until you sit down and you start doing it. You start watching how it changes when it hits the moving averages, when it hits pivot levels, when you draw a line on a chart like a fib level and it hits it and it starts reacting different and you realize what's happening there and you see these shooting star reversals come in and you watch the order tape and then you watch what happens at the bottom of a 2 minute candle when that fails and it's going higher. And until you just start doing that in these names, there's not a short answer or a quick answer to that other than time in the chair.
Yeah. And that's why a lot of experienced traders recommend only trading a few stocks. I think the main reason for that is because you get so used to how it moves and how to read the tape and all that. When you're trading, when you have your eyes on 20, 30 different stocks in any given day, it becomes really hard to be in touch with like how that stock is trading, not only that day, but even that week or month. So I think it's best to limit yourself to a few names, get really used to them, and it's a huge benefit.
Yeah, unless you're doing like again the whole measured move and target stuff. But if you're day trading and
Yeah.
scalping stuff, and like even those names though, like if I was trading, like the reason I like Meta so much is because it really does one. It doesn't do it early. Meta has to develop, but once Meta puts in a leg, it does get very orderly, especially off the 21. Like I have found it to be a very tradable vehicle on a second leg off of the 21 on the 2 minute. And that's why it's like higher on my list now than it used to be. I used to do Square. I haven't done Square in a while. But the names I trade are the ones that I recognize actually like follow, excuse me, the system that I use. If it doesn't do that, then I really don't mess with it. That's just me. Like because I know like maybe how Amazon trades or something. It's like you get a feel for it and you're like, it's going to respect these levels. It's going to respect the 21 the first time it hits. And I draw these lines at the end of the day and I come in and I check and I practice a little bit and I see that it's working. And so I tell myself, well, look at this pattern. Okay, when Amazon went up and it came down below the 21 after a few bull legs and it retraces into the 21 without breaking it, what can I expect to happen? Is it actually, making these moves? Yes, I can actually expect these downside, moves. Okay, cool. I'm going to look for that tomorrow. I'm going to look for these legs to go up. I'm going to trade them, and then I'm going to stop when I think that they're done. I'm going to wait for pull-ins below the 21, like here, I guess. Actually, that would be more than one. And then once it pulls down below it and it hits it, I'm going to look for it short. And you start looking at that and then you watch the tape during the day and then you start trading them.
It's funny because we do a lot of fib trading on Tesla, but I think Tesla is like not the best fib stock. I think some stocks like Nvidia and stuff, even the Qs tend to respect fib retracements and stuff better. I mean, Tesla's such a Momo stock and it's always just so driven by momentum in that moment that sometimes it just blows through these levels. But some of the names that are lower prices like Nvidia that are a little less volatile, can often be much better fib trades for targets like that. So that's something I'm trying to get better at, just,
Yeah.
Tesla's probably going to split here in the coming months. So got to get used to that style of trading too.
Yep. I'm at least trying to mix it in and getting used to how they move. I mean, look at this. Like you talk about NVIDIA. There's your first leg in NVIDIA, your pullback, your test of the 8 on the 2 minute, and there's your 127. So
Let
boom,
me
boom,
pull
boom,
this
NVIDIA. Just fib your first leg in NVIDIA.
first leg up to 952.
Yeah, 952. So the bottom of 36 to 952.
Yeah, look at that. Came out exactly to
And that's not an
uh,
easy hold, honestly, if you've traded NVIDIA and the way that it moves and the choppiness and such things. But if you wait for the moving average to hit, and yeah, you're going to miss some legs, but you wait for the moving average to hit and you take it, and boom.
and then fib the same bottom of 936, but to the top of 1018 when you had a bigger leg up. And that one retraces to the 61, I'm sorry, 38.2% retracement, almost exactly, a little bit below that line, but then it came all the
Mm-hmm.
way up to the 161 by printed like what 20 cents over that and then pulled back. So,
Mm-hmm.
and the thing is, like with that name, it's a little bit easier to buy and get your entries at the retracement levels, unlike Tesla, which can be so, volatile in that moment. Sometimes like you have like milliseconds to get that entry before it whips up. Then you're like, oh, I don't want to buy here. It may whip back down, and then it does. But with these names that move slower and aren't as volatile, it's sometimes way easier to time your entries and exits.
Yeah, and even like this, like, it comes up at retest once it breaks below the moving average and has a 2 minute candle close before it comes back up into a red takes green, and you hit your, that is not as big of a move, at all here. So this one's kind of like you're not going to be getting paid as much, but other names work too. And you can use this style of trading to identify. And trading to me, and I'm sure for you, is just about finding your edge in the market. Like, what is going to give you an edge to make money and to make a living? Like, what can you do to time your entries to find a way that the stock is going to move, to ride that wave and to get off every day and to basically be a bandit? There's a reason the room is called the Bandits. Like, the market bandits, were just coming in, bang, 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 robbing the market and leaving. It's easy enough.
Yeah, exactly. One of my favorite things about fibs is that when you have like a big leg like that, and then you have a retracement, you have obviously the 38.2% big one, the 50%, 61.8. If you come down to that 61.8 and then it breaks through that and doesn't find support, then like I immediately switch to, oh, I'm now like, if it was in this
Mm-hmm.
scenario, I was originally bullish, I immediately switched to I'm bearish now. This is a reversal. I think we could be going to day lows soon. And when it like maybe comes back up to touch that 61.8, I'll even short right there and try and hold for day lows. That's why even if you're not, like we were saying earlier, if you're not actually trading directly off the fib lines as your entries, like having these lines drawn to gauge where you're at in the move is very beneficial and helps you know whether to stay bullish or bearish in that moment.
Yeah, and then you're like, hey, I still like this. The market's just digesting. I think this has more legs. I think we can go higher. I'm going to look for a re-entry to take this, up. And also, like, you guys like AMD, look at AMD. It followed the fib after this first move here. If I'm just going through random charts and throwing up stuff on the first leg. Today wasn't the best day for a lot of that, just because you had an obviously overall. But I mean, it still works. Now all these hit Amazon. I think I already did Amazon. Amazon worked 127, 161. It is Rose. What up, Rose? How you doing, girl? The Amazon queen.
Hi, Rose.
Anya Gator Mitchell, I don't know if you answered this, but I've been having a hard time catching Tesla breakouts this week, which ends my day super small green. Any advice on entering the bigger moves? So the bigger moves are, that's a tough one. So Tesla's been hard, in my opinion, a lot this week, and I've only traded for about 45 minutes, except for today this week. Like I traded the first 45 minutes, I've been done for the most part. Um, I mean, the way to time it is to wait for a moving average to test and then buy a 2 minute low. Like if you're talking about timing it, what up, Ms. Um, MZ, the way to time it, Anya, unless you're just being really aggressive and you're really trying to time it and hold it, like how wide is your stop? Do you want to have a wide stop? Do you say I'm cool with losing a point on entry? Like what are you saying and how you're saying? Like if you say that, like hey, I want an entry on a stock. I want an entry on Tesla. And I am looking for early in the day a time to get in. I only want to take one or two trades. I'll give myself a point on it. Okay, what can I do? I would have two suggestions, and Mitchell might have something different. One is wait for a bullish or bearish leg or a breakout. This, let's say you don't take any of this here. I would take this because it hit the 8. I'm showing the 10-4 candle on the 2 minute. So I would say, okay, we broke out through day highs and we tagged the 8. All right, so we're back into the 8. I'm buying as this broke the 8 and starts ticking up with a stop down at, let's say, the 61.8% retracement line. If it breaks that, I'm out and I'm going to take a point loss on it. I'm willing to give it a little bit of room there, and I'm just going to let this ride. Then you can catch this. The second thing I say is you wait for this, a 2 minute bottom that you can enter on. So you say, I'm just going to miss the move, but somewhere within this move, which isn't always the case, I'm going to get a double bottom like this. So I'm going to leave all this alone. I'm going to wait. And I don't know if it's going to happen or not, but when a 2 minute candle pulls down to the bottom of it, I'm going to take it long when it shows it's going to go higher. And that might not happen because you might be up here. I don't know, if you're talking about timing the perfect single trade entry, this is what I would be looking for. And if you look at every name today, you'll see this pattern hit. And Mitchell, I don't know if what you're.
No, yeah, I definitely agree. It's always trying to buy where you're minimizing your risk. And it's always going to be a little different for each person. Like if it comes down and holds that 2 minute low, maybe just as it comes up a little bit, you buy in, or maybe someone else wants to wait just a second and make sure it stabilizes around that low rather than have an opportunity to flush down further and you just wait a little bit longer to enter. But always buying on the other side of a range, not buying right by the breakout, because when you do that, like we were saying, I mean, there were days last year in the full-on bull market where you could do that. Like you had a M1 or M2 or M5 or whatever, and the tape was so bullish and stuff, you could buy like 50 cents below the trigger and it would just blow through it and work, and your fills were great. But you have to recognize that this year that just has not been working. So you have to always buy at the opposite end of the range in that moment. And usually for me, I'm not paying attention to the 1 minute chart too much. I mean, sometimes when it's a really strong day and the tape's really strong in one direction, I am watching the 1 minute chart and playing those when it's holding those lows or highs. But usually it tends to be the 2 minute or 5 minutes. But even then, it can be the 15 minute or hourly. If there's an hourly breakout that I don't think is going to run because the volume's not there and the move's over, if it comes through and triggers through that hourly breakout and it prints 20 cents above and then the tape immediately weakens and starts to pull back down, I just jump in the opposite direction. And you're usually immediately up on the trade 10, 20, 30, 40 cents. And you just set your stop like, 20 cents above where you entered. And if it comes back up there, you're going to take a really small loss. So it takes out most of the stress of these hyper scalps. And you just pick a target, and you hold. So it's really beneficial to buy on the opposite end of those ranges because Well, the other aspect of that is sometimes it's coming up to a trigger and you're like, you know what, there's a lot of risk if I buy here. Like it seems like it can work, but if I buy here, I know I'm risking it whipping down. I may not get a good fill. You have to always be in the mindset that if it ends up going through that trigger and it does blow through that, you have to not get FOMO. You have to just recognize, you know what, like that worked really well. I didn't take it and I'm okay with that because I was, trading smart and minimizing my risks. You have to just immediately like, tell yourself, it's okay that I missed that. It's going to happen. I just need to focus on trading smart. And you'll realize you don't really get toxic from missing something like that because you were trading smart versus when you jump in something like that, it whips down, then you get toxic. Then you start forcing trades and make back what you just lost. Then you give back half your day, you give back your whole day. So you just always have to focus on trading smart. And if you miss something, it's fine. You'll move past it. There'll be another opportunity in minutes or the next day or whenever.
Yeah, you're gonna have more if you're looking for something specific. And also, if you're fibbing lines on you and moves, that gives you your bigger target. So, like Mitchell said earlier, you know where you're at in the move. Or you know, like, oh, I shouldn't be buying up here because I'm at the end of it. We're above the 161 and we're just going up. I need to wait for a pullback now, and then, oh, wait, we pulled back into the 21 for the first time. Okay, I can take a buy here. And we talked about this trade earlier. And something like that can allow you to get, that move. And time it up, like Mitchell's saying. I don't know
Do you want to
how
pull up
helpful that
a
is.
fib trade from last Friday? I want to show you to give an example of something.
Do we have a 2 minute from
On your,
last Friday I can go to? When was last Friday?
uh,
I can,
this
yeah.
is
20. Yeah, I can. I can go back that far. 2 minute chart,
okay.
the
2 minute
22nd.
chart, Friday the 22nd.
It's here.
Just go right to the open of the market on Friday.
22nd. July 22nd. We
And then
are.
draw that first leg up, the bottom of 9:38 a.m. to the top of 9:52. Draw that leg for the fib
Hang on, you talk.
line.
9:52. Oh, 50. You talking about this?
So the bottom of 9:38 a.m. to the top
Oh,
of
9:38. Sorry.
9:52.
9:38. Why am I stupid? 9:38. I gotta zoom in. Give me a second, guys. Sorry. Oh, I gotta show y'all a picture in case you didn't see it yet.
Then the top of 9:52.
9:52 is here. Okay.
Okay. So this is a perfect example. Like if you watch that, this was the open on Friday. You have this big leg up. Clearly, the order flow is bullish. You're now kind of biased towards long setups, and then you have a pullback and retracement, and you see it comes right down to the 61.8% retracement, which is around 826.92. You see that one?
Yeah, it's right
It's
here.
hard for me to see on your screen
Yeah, it's
because like
hard.
it's pretty
I'll
small.
I'll do this. So this is it right here. This
Okay,
line that
yeah.
I'm at is the 61% retracement.
So that, I mean, that's kind of, for me, that's the last stop. I mean, there are some further retracements past that, but if it doesn't hold that, then that's when I'm looking for a reversal. But if you watch here, it comes down, touches it almost exactly. It prints like, 60 cents below. And my kind of general rule of thumb is that if it comes down and touches that line and doesn't flush more than a point of that line, then I'm still looking at that as an area of support. And so once it hits that line, comes a little below, I'm now watching the tape. The second some buying comes in, I jump in. And if you see this trade would work really well because it came down to that 61.8% retracement and then it ran and put another leg and it made day highs. But like we were talking about earlier, let's say you bought in your whole position down at that retracement and you're like, you know what, I'm going to hold my entire position for the 127 extension. You would have entered around, let's say, eight in the high 826s, let's say 827. That got up to 842.36 at the height of that leg. If you would, so that's a
Pretty good
16
payday.
point move in the stock. It's a 16-point move in the stock. If you were holding your whole position for the 127, which you can see never hit, the stock reverse came all the way back down to your stop and then to day lows, you would have given up a gigantic amount of money. So that's why we're saying, like, when you have a target like a 127 extension, you should never just hold your entire position for that. You have to do what Kelly does, and that target is your runner, but you should be taking profits the whole way up, whether it's waiting for the next 5-minute breakout or 15-minute breakout or whatever you feel comfortable with. Take some profits that whole way up so that when it gets towards the top, if the trade ends up failing like that and your runner doesn't hit the target, you still are very profitable on the trade. It's just your runner may come down and hit the stop, but that's okay. You're just going to recognize, it's fine. I made, good money in that trade. It hit my stop for my runner, and I'm fine with that. But if you held your entire position for that and it came back down to your stop, you'd be really toxic because you just gave up a gigantic amount of money.
Oh yeah.
So yeah, it's very important to take profits on the way up, and it's going to be different for each person, but try and work out like some rules or strategies for how you do that.
It'll be based on your size and stuff. But this should almost always be a target. A double top is almost always a target on a day. Like, you gotta have at least 2 targets or 3 targets. It's like, oh, we're going up, we're a few points up, sell a little bit. Hey, look, double top. There's like a 90% chance I'm selling into a double top, guys. I don't know. That's just me.
Yeah.
Yeah, it's a great Mitchell. I
I think
could not
that's
agree
actually
with you
one of the
more.
things I'm struggling with most at the moment is like knowing when to take profits. It's that I think that's one of the hardest part is when you do these types of trades and they're working and like another leg's coming, you're like, God, is this going to run all the way to the 161 extension? And then, or sometimes I just take the money way too early and it does run, or sometimes I hold for a bigger move and then it ends up not working when I was up, well in the trade. So it's, I think the best way to do it is just to piece out a little bit by a little bit as it goes up, because it's really hard to gauge whether it's going to run the entire way and hit these targets on any given day.
Yeah, I think he does, Matt. And then I'll answer the other question. But yeah, Matt, I think he does. I think on the 62% retracement, targets day highs, and on 50%, it's going to make a new high. Or it might make a new high, but it's not necessarily going to hit the 127. So final target on a trade of that one is generally a little bit lower, I think. I could be wrong. And I agree also, for Anya and others, like, look for Praveen says, and what up, Praveen? How you doing, brother? Haven't talked to you in a while. Hope you've been killing it, man. Look for a doji sandwich or inside bar breakout. Like, inside bar breakouts, if you're looking for a time to chase, as it were, if we could go to today, like a 2-minute inside bar breakout, or a 1-minute, like this right here. Look at Tesla at the end of the day. Like, you have a 2-minute run up, and then we're here. You have an inside bar breakout, or something like that. You can find stuff like that. That's not a great one, but you can find stuff like that to take. Those seem to be very effective, especially in early. This is one right here. This is kind of an inside bar breakout. You're inside a bar from the previous bar. You go up and you break out. Stuff like that. Doji sandwiches are very good. This right here. Chart pattern or candlestick patterns, I guess you would say. That if you see something like if you're in the middle of a bull move and you get on the 1 minute, like if I'm looking on the 1 minute and like when do I chase something? Well, if I get an inside bar, I don't really see any. Some here, but this is consolidation. You need this to hit. If you get a bar that like goes up and it's just sitting there for a little bit, maybe it pulls down just a bit and then it's just sitting there, and then the market's strong or it starts going strong, that's usually a high buy signal for me for relative strength. That's another thing. Good, man. Glad you're doing all right.
Am I able to share my screen really quick? Is that set up or?
I can make it work. You share it, and then I'll just have to play some editing. I might have to, let's see, guest host. Move my face out of the way. Try it and see what happens. So share it through Zoom. Share it through Zoom.
Right. It says host disable participant screen sharing. Maybe that'll update here in a sec.
No,
or I think it just changed. Oh, no, man.
I probably have it done that way. Give me 1 second.
If not, I can just tell you
can
with
do
the
it
fib
now.
on the.
You can do it now.
Okay. Okay, I need to pick where. Oh, okay, monitor 5.
Yeah, let me know. Hey, puppy.
I think it is working.
Yep, just give me
I'm
one
on
second. I have to
I'm on
do
an ultra wide monitor. I'm not sure if that
that.
messes
Doesn't
up
that
like
doesn't
that.
nope.
Okay.
Just give me 1 second to fix us. Hey, I think I've got you. Yeah, I've got you. Oh, hang on. Give me a second. Sorry, guys. You're watching this on YouTube after the fact. I don't know how far you're going to go, so I'm trying to get it all in. There we go. And now I'll shrink that some. Stop. What is this? All right, there we go. That'll work. All right, I got you.
Okay. Just gonna show a couple quick. Just a reminder that my 8 and 21 are reversed. I have my 21 is yellow and my 8 is blue. So I'm sure it's weird to look at. But this is a daily chart of Tesla. So normally we're always drawing fib lines on, like 2-minute charts and stuff like that. But I've been trying to do a lot more in the daily chart too. I'm sure you do too. But like to give an example, here's a fib line. Like if you draw the daily fib line right here, so here's July 13th to the high of July 18th. That's kind of like a leg up on the day. And then you see it pulls down here and almost exactly to the 50% retracement. It respects that as support, which also lines up as a daily 21. That actually would have been a great trade if I saw that. Um, it comes down to the 50% retracement, the daily 21, and then it holds that as support and it ends up closing above that, and then you run higher. So when you're looking at the daily chart like this, you draw a fib line on a leg like that, and you see it respected the 50% retracement, going into like that next day, oh, I'm bullish still. Like I think we're still in a sequence. I think we're still moving up, and it's very helpful to like have a bias towards long setups in a situation like that. And you can see it comes all the way up and even goes above the 161 extension to give like another one. Here's you did this leg, which is a leg a couple days before that. So here it came down and it broke the 61.8% retracement and then opened up lower. In that scenario, you did have like kind of a green bar, but I would be much more careful going into that day, knowing it kind of broke that retracement. But if you fib this line right here, so before we had just done this one leg up on the daily chart, but if you do this whole move here from the bottom of July 13th all the way to the top of July 22nd, you see it comes all the way up, retraces to the 38.2% retracement, comes down, touches the daily 8, almost perfect. And then the next day you open above it. And so that general level around the 38.2% retracement and the daily 8 was seen as support. It respected it. The next day you open above it. And so going into that day, you kind of have a bullish mindset and you're looking for long setups, and that was today, and Tesla ran today. So having a bullish, bias would have been beneficial. So I think drawing fib lines on, like, I don't ever really take fib trades off fib retracement levels or anything like that on the daily chart, but I do find them very helpful to have a bias going into any given day, whether, we're still continuing to move and because retracements are being respected, or if it's breaking down and maybe we're seeing a reversal and it's time to like switch a bias, or maybe we're going to see some chop or something like that. So I'd recommend going through the daily chart like this and just messing around, fibbing different lines and to see how they're being respected or not respected, and to kind of develop a trading plan going into the following days of whether you should expect there to be a further move or consolidation or a reversal.
And then understand that, oh, there's Russian bots in the chat. I wasn't even watching chat. I got to make other people
Oh my
moderators.
God, look at
Yeah.
that.
Hey, y'all can go on some dating stuff apparently. How do
It's
I
so
delete? Oh,
weird.
I don't have my other thing open to edit this. Let's see. That doesn't mean you guys can post whatever you want to. I'll get you back. Mm, yeah, I'll get rid of those. Give me a second. But yeah, give me a second. I'll get rid of them. I should be able to. Here we go. This thing is stupid. But yeah, what Mitchell's saying is correct, and you can also look left for day stuff. Hang on.
I was gonna actually have to show one more here on the
Yeah,
video.
you're good. You're good. Let me delete these
Um,
comments.
sure. If you look at the daily chart on the video here, we can look at two here. Here's the bottom of July 5th, which was obviously the bottom of that range. And then it came all the way up to July 21st. If you fib that whole move in the daily chart, you see NVIDIA comes down here to the 38.2% retracement, which lined up almost perfectly with the daily 21. That again would have been a great like swing trade there. But you see it opens up the next day above that retracement. So you know it was respected. It was a support area. So going into today, you would have a long bias, which can be very beneficial. If you fib, let's see if we fib just this initial leg up here. Look at that. At the bottom of July 5th to top of July 8th, that's just a first leg up. It came down almost to the penny to the 61.8% retracement. It came down 14 cents below that, respected that perfectly, closed all the way above it. The next day opened above it. So now you have a bullish mindset, and then it puts in a whole nother leg up, even past the 161 extension. So I think, again, even if you're not trading these levels on the daily chart, drawing these lines are really beneficial to know where you're at in the move overall on a daily chart and to keep a certain bias long or short.
Yep, which can save you in the middle of the day for sure.
Now I'm wishing I took this trade right here, or swing trade,
You're
or
like,
whatever.
no. Yeah, I could definitely, I don't know, eventually I almost want to at some point find ways to do some of these longer swing trades and some of these other ideas on some of the stuff like this, you know. It's not something I routinely practice other than to look at it in the day. Like, how many times this week or over the last week, guys, so I've been in the morning, like, I think Meta is going to this level. It needs to consolidate and break out. When it breaks out, it's going to this level, or Tesla. And then it just, like, ends up there. And I'm like, darn it, why don't I trade these stupid ideas? I'm wrong sometimes, too. But, you know, it's just like, come on. I really should make money off of my blabbing mouth.
I was gonna stop sharing my screen, but my
It should
Zoom
be at
thing
the
popped
top
away.
of Zoom, so it should be over at the right. I mean, I could probably stop you from sharing, but let's see.
It's weird. My actual like Zoom screen I had
I
open
stopped you.
disappeared.
So let me
Okay.
jump.
Oh, yeah. Okay, I'm good now.
There you go. You're good. I just stopped you from sharing it, but yeah, it'll go into a little square. It'll go to the top of the screen. You have to go to the top of whatever window you're sharing, and either way, I don't need to make a tutorial on that. And it'll drop down. It's annoying. I've had it
Okay.
happen in the morning. But yeah, y'all got throw some yeah, Jason Pelosi took that trade for you.
Yeah,
That's why she went
exactly.
long, guys. She went long because it hit the 61% retracement. Don't you know? Her husband's like an amazing day trader. He's probably in our room. I doubt he's in ours, but
It's
he's
funny because I remember I saw that news that he had bought NVIDIA, and then I read some more news about the upcoming semiconductor bill, and I was really focused on NVIDIA. I think it was like the beginning of last year. I forget what day it was, but I was really focused. I was trading NVIDIA more than Tesla that day, and it was like a really good day. NVIDIA had some amazing trades, and so that was definitely a nice news boost having all that.
it didn't hurt. Yeah, Russian bots are learning all about the fibs. They're learning how to do it. Yeah, the diamond hands, Anya and Rose are going to be getting. I'm telling you, yeah. I don't know if you are at the beginning of the show, but we talked about doing football stickers for people. But we were going to do tacos and send people taco stickers, or we could do diamonds and send people little diamonds and stuff. And when you're calling out good trades, and you get and you hold them to target, you get diamonds or tacos, and we'll just send people. And you have to put them on your headsets or on your desk. And then you have to post a picture of it for clout. So we can tell who the real MVPs of this team are. Tacos has to be tacos. That's fine. It can be
Yeah.
tacos. We are bandits. I think that fits the theme. Well, I'm glad you've been like consistent or been kind of growing in your consistency and adapting. Like it seems like you take the stuff JR talks about and the stuff that's working and kind of to heart, as it were, and like are adapting your trading style, finding what's working every day. And you're not. I mean, we all trade Tesla. And somebody asked earlier, like, are there other names that move? We just trade Tesla a lot because of the volatility. When you're right for 2 or 3 points. There are other names that this stuff works on, but a lot of the names, like, they don't trade the same. Tesla's just fun the way it works when it's working. There's no name that works as well as it does when it works, and that's why
Yeah.
we do it.
I used to love NVIDIA before the split. I
Yeah,
was
me too.
making just as much with NVIDIA as I was Tesla. It was trading, there was days where it just traded like exactly like Tesla, and then it split and completely changed. So, Tesla's probably going to split here 3-for-1 in the coming months. So just kind of, life, just have to readjust, reevaluate strategies and maybe just switch to more longer holds, but it definitely will be plenty of opportunities. Just have to be willing to change everything.
I'm glad that it's a 3-for-1 and not a 5-for-1 or 10-for-1. Like a 3-for-1 seems like it's still going to get some good moves. Like if Tesla goes up to $1,000 or $1,200 and then it goes back down to 400, I still think we're going to get some good moves in the name. You know?
Yeah, I find when a stock trades over $300 is when it's definitely easier for me. Ideally over 400. I mean, ideally like closer to 1,000 like Tesla, but when it gets under 300, that's when I have a much harder time. It's just so slow.
Yeah.
It feels like you're trading a turtle.
Anya asked like what you had to do the other day to like trade Meta and some of these other names. And I found the difference in them and Tesla is you have to wait for consolidation. It's like once it hits a level, unless it's like the first time hitting it early on, it's like, yeah, you need to wait 15 minutes and then it's going to go. So it's like, yeah, buy it, set your stop, and, or wait 10 minutes and then buy it and you'll be fine. So annoying. Like that, the market makers have to buy up more shares before it'll run. I miss Amazon too, Praveen. I miss Amazon so much. Amazon and Google, I made a lot of money in pre-split. Probably as much as Tesla this year, honestly. And then they go and have to do what they did to
Yeah, I
us.
haven't even traded Google since the split.
I haven't
Um,
touched it now.
yeah, it's a bummer. There's some great days on Google in the weeks prior to the split. Yeah, it's
Really
traded at
funny.
$112. It's just terrible.
Yeah, I haven't touched it. And Matt, yeah, you can do bracket orders with Fidelity. They have a tool. It's called Trade Armor. So if you go in Trade Armor, you can just do bracket orders. And Fidelity also has if then this orders. So you can do like if the price hits this, sell my options. Like they have like conditional orders. They have bracket orders. I just don't use them for the type of trading I do. Um, but if I was to do stops, like I have considered opening up a cash, not a cash account, but cash, and doing something like this in the morning where I literally just fib a line and then I put in a bracket order. Like once it hits the moving average, I just put a sell at the 127 and then I just put a stop down below my entry and I just leave it alone with common. I've seriously considered doing that just because bracket orders, throw it in, bam.
Yeah, I also set a lot of alerts in TC 2000 if I'm
Yeah.
like waiting for a bigger pullback for a possible entry on a trade or something, but I want to go make breakfast or something. I just set an alert so if it crosses down below or above a certain price, my computer like rings or makes a sound. You can customize the alerts and all that, and I find that very helpful because there were a lot of times where I go step away on a call or to make food or something for 20 minutes and I come back and I totally missed a trade I've been watching for like 30 minutes. So I highly recommend setting alerts in TC 2000 to notify you of important levels you're watching.
Yeah, I love their alerts are really nice.
Yeah.
And yeah, Praveen and Rose morning. I still Amazon is not as bad as I haven't touched Google yet. I don't know. It's not as fun as it used to be. I loved Amazon, but it's not horrible. I have made money in Amazon this year. I will say I'm green in Amazon this year post split. Maybe not as green, but I'm still green in it.
I really like the way Geronimo trades these lower price names, whether it's the Qs or Amazon or something, how he will like buy at his, target entry and then he sets his stop. It could be like some kind of, 15-minute pivot or something like that. But as the trade starts to work, he takes like, let's say half his position. And as he calls it, he finances his stop. So that way if it ends up reversing and not working, it comes down to where you entered and he has to stop a little bit below that. If it comes down and hits his stop and he sells out the rest of the position, well, he already took profits when it was working on the first half. And so he already knows, like in worst case scenario, if it does hit that stop, he's just breaking even on the trade. He's not going to make anything. And I think that style of trading on these stocks that are lower priced and take longer to move, aren't as volatile, and are longer holds, like it makes it way less stressful and easier to hold. So that's something I'm trying to practice is organizing your stops and your initial profit taking so that you finance that stop so that you, at worst case scenario, break even if it reverses and doesn't, hit your final target.
Yeah, I'm kind of trying to figure out ways to do the same safely in the names to take the correct amount of size. A lot of times, it's like Rose called me on today. I was just like, you need to take the right amount of size so that you hold the trade. You know, if you do that,
I'm
it's much
interested.
easier. Sorry, go ahead.
I'm interested to see how Tesla will trade after the split because, like you're saying, it's 3 for 1. So, I mean, Tesla is around like 800 right now. So 3 for 1, would be like what is that like 260, something like that. Um, Even though that price 260 will be around some other names like the Qs, I think because Tesla is such a momentum stock that it's still going to be more volatile and have more momentum plays than a normal stock would trading around that price. So just because Tesla is going to split 3 for 1 doesn't mean I think it's going to immediately trade like the exact same way that the Qs do or Amazon or Nvidia or something like that. I think it's still going to have like an aspect of volatility to it, unique, that's different from those other names. So it's going to be interesting to see how it trades after the split.
Yeah, I think so too. And I mean, I don't know when it's going to happen, but I'm choosing to take the approach of being like excited to be doing it. Like, you know what? I'm just looking forward to having the opportunity to trade it. And I'm going to try to take that approach to it as opposed to like being upset that it's trading.
Yeah, exactly.
Yeah, the IV will always be high on Tesla until they do like 15 splits and they just keep doing it. But hopefully they don't. Hopefully this is, the one and then we can get used to it and it'll run back up to $1,000. Well,
Yeah, on those days when implied volatility is on your side, that's when you have your best days. It's a huge benefit to be jumping in options, playing some kind of breakout and to have the value of the options already inflating as it's barely moving up simply because of the implied volatility of it doing that next move or something. So that's why it's so beneficial when you're in like a bear market or bull market and you're trading in that direction to be watching the IV and to kind of capitalize on those moves and then be careful when it's just not there.
mm-hmm.
I
For
mean, I
sure.
remember I talked to Rose about it one time, but last year, earlier, like middle of last year, or maybe around like April, May, June or something, with Amazon last year, but obviously before it split, there were days where you could just like jump in Amazon options and it would be staying completely still. But because it was such a bull market, like you would be a point up on the options when it hadn't even moved simply because the IV was like inflating like crazy. And you could literally just, if there was good PI, just jump in, hold the trade for like 10 seconds, 20 seconds, and the stock would hardly even move. And you could sell and make a point just from IV and just from PI. Those times are gone, but they
For
were good
now, what are the most
for now.
expensive stocks? Let's see. Because
Yeah.
I'm just going to go and I'm going to start messing with all the ones that are over $1,000.
The Shopify split? I forget.
Yeah,
Yeah. Oh, yeah.
they
God,
split.
Shopify $35.
What
It's
about
crazy.
AutoZone? AZO. Oh, that I can't do that. Look how that moves. There's no way. It sits still forever. Yeah, I can't do that one.
I've wondered because the logic behind these splits is like, oh, if we split, the options and stuff will be way cheaper, or the shares will be cheaper. And so therefore it's more attractive for retail traders because they can actually afford to buy shares versus like Amazon trading the 3000s where a lot of people can't even afford one share. But when you split that much and something like Shopify is like now $35, like I feel like the volume dries up and not that many people are trading it while people are still really focused on something like Tesla that hasn't split. So I'm not like so convinced that that does like attract that many retail traders when you split that much. I mean, I don't know. I'm sure there's all the data behind it. I know what I'm talking about, but I don't know. Just seems like those moves become a lot more lethargic and don't move as much after these splits.
Yeah, they're definitely a little bit slower, but I guess I don't know. I don't know. Whoa, look at Chipotle. That's a move. hundred
What's the
dollar
ticker
move.
on Chipotle? I've never traded Chipotle in my life.
CMG, CMG. I don't think I ever have either. I think I might have in 2020 on some news plays. It looks like it's dead most of the time too. I'm gonna have to watch some of these. Um, I'm gonna have to watch some of these because I never really did fib lines and stuff with stocks that are this expensive because
Did Chipotle have earnings today? I think they might have had earnings today. I heard them talking about it on CNBC today.
yeah, they
I think
probably
Jim
did.
Cramer was talking about it in the show.
Yeah, I'm gonna have to mess around and try some of these higher price stuff to see if I can find some scam options. Y'all remember the scam options? See if we can mess around and find some of those.
I think Meta will be interesting tomorrow because I didn't really look into it, but I believe they missed earnings. But there was also a lot of information in their call where they're talking about Reels and like they've been taking a pretty big market share from TikTok and stuff and had pretty good revenue from that. So I'm wondering if tomorrow if Meta will maybe open and like have a bit of a pull down and then run back up and like do the gap fill or something.
It looks like
Um,
it's 7 points down at the end right now, down at 61. I knew I should have shorted Meta. But yeah, it's going to be down here. So Meta is going to be here. If you look at my chart.
Yeah, I'm gonna watch that tomorrow. I'm thinking maybe it opens and sells a tiny bit and then it retraces closer to that gap fill. So I think it could maybe be a possible long setup. I don't think their earnings were as bad as some people were saying.
Maybe not. Yeah, you are. Yeah, I don't know. Yeah, I could see that and see it going up higher. I don't know, to be honest. You can set up, you can kind of confirm this higher pivot low. If you hold 57.95, you don't break that. That looks bullish to me.
Yeah.
If you basically hold this level and you hold this like higher pivot low that's set in here and you just go higher, I don't see why you wouldn't just, you know, continue. But what do I know? Kathy play. We need to track earnings and play 1 month before that. Yeah, I mean, I'm not a like. I would definitely have to. I would have to take time to practice doing what Kathy does and to like track earnings and to pay attention to that. And then a month out from earnings, kind of begin playing the name and watching it. Like that's a certain type of uh, that takes a certain skill that at the moment I don't have for sure, Praveen. Well, I know Mitchell said that you wanted to do, about an hour and a half. We were right there, a little bit past it, or you wanted to keep it under that. So if you guys don't have any other questions, really quick, I mean, you can always ask them during the day if you're wondering, you know, where you can trade with these amazing dudes and all the people in chat and the dudettes, Mrs. Rose herself. We have a Discord, links in the description to this. It's free to join. You can come and trade with us. If you want to, you don't have to. You can always like and subscribe to this YouTube channel, like this video. I really appreciate it. It does help the channel out. It helps it with algorithms. It gets additions, and we've been growing pretty good here lately, and hopefully in the very near future we'll have a lot more content coming out. I wish she would come on too. I really do. I've asked her to come on, and she doesn't want to, which I do understand. Doing what she does and trading how she does, I understand why she doesn't want to do it, but I really wish she could come on too. But I'm glad that we do have her in the room. She's taking the summer off. She always takes the summer off, but Kathy's amazing. I'll also have a NewsBeat Live link you can click on in these video descriptions very soon, an affiliate link for them. So if you guys want to join the NewsBeat Live Room, you're not a member yet, you can click on that and it'll support this channel and help me out some. So if you're interested in that, go for it. Always the liking, the sharing, all that fun stuff. You guys are the best. Mitchell, you got anything for the peeps?
No, I think that's a great idea. It's super, super beneficial having both rooms because you can weigh like what multiple people are thinking in that moment and how they're evaluating the conditions. And when all those people's same evaluations are lining up, they're all saying, oh, I think this move may be done. I think we're entering a consolidation or chop zone here or something. Like it's very helpful to know, oh, I think I'm going to, step back for a while and, take a break or lock in for the day and wait for tomorrow or something. So I find it very beneficial. It's definitely just a community of people trying to help each other. And yeah, glad to be a part of the community.
Yeah, I'm glad to have you, man. We're glad that you're here. I know everybody in this video and everybody in the NewsBeat room is really glad that they have you. So I appreciate you coming on and hope that you can make the time and we can have you on again and chat some more. And maybe we can get all the bandits on here sometime. We almost have to do like an afternoon show or something in the weekend just because of everybody's schedules and stuff. But, love talking to you, man.
Yeah, definitely. We'll see you in the morning. We have some economic numbers tomorrow, right? It was an inflation number or
Yep.
GDP
GDP numbers.
there's
big
also
growth.
numbers Friday. I totally forgot. There was like consumer confidence. I forget if that was in the morning tomorrow.
Tomorrow, Michigan sentiment is out 30 minutes before the market tomorrow,
Right.
and GDP is out an hour before the market. So you'll have the GDP numbers, which is the old definition of the recession, which is the definition of recession. You can't redefine a woman. You can't redefine things just because you want it to mean something else, guys. Sorry, not sorry. And so GDP numbers come out at 8:30 tomorrow. Yeah, 8:30 or 8 tomorrow, and then the Michigan sentiment numbers come out at 9, right? If I'm remembering. Either way, before the market.
Yeah, I think so.
Consumer confidence.
So yeah, I've seen mixed, opinions that it possibly could be a negative GDP for the third one in the row, or it could be slightly green. So I guess if it was slightly green, the market would interpret that as pretty bullish, and if it's slightly red, I mean, we could see a big sell-off, but I'm not sure. It's hard to say, but definitely just going to be watching the price action at the open and whether we have a gap up or gap down.
And jobless claims tomorrow.
Jobless claims too, yeah.
Yeah.
Right.
No, it's it'll be an interesting morning. It'll be an exciting morning tomorrow. And if you guys, if you're in here, yeah, consumer sentiment, move the market. Yeah, I agree, Eddie. Eddie knows what he's talking about. Eddie, man, I gotta get you back on here. But no, yeah, it'll be an interesting day tomorrow. So tomorrow at 9 o'clock, I'll be in the Zoom call with Andrew and the other traders who come in to share ideas. Is it 10 on Friday? Michigan is 10 on Friday. Okay, I got it mixed up. So that'll be.
Then we have new
Mitchell.
home sales. Or no, that was Tuesday. Sorry, new home sales was Tuesday.
I think what you're thinking about is Michigan consumer sentiment Friday, Mitchell, is what Eddie's saying.
Right here, I forgot I have this economic calendar. I just posted it in the chat there. It's pretty beneficial. It shows you all the times and the different reports that are coming out. I got to stay more on top of that.
I just trust JR to do it for me.
I know, that's the thing. I just listened to JR. I'm like, oh, I got it all down now. So
he's like, well, he's going to tell me what's going to happen in the morning anyway. So why do I need to know?
Exactly.
We're lazy. But yeah. I appreciate you guys coming out and watching, spending your night with us. It's late night. Really appreciate it, guys. You guys are the best. Love trading with you. Hope this helped you. Special thanks to Mitchell and everybody. So I'll see you guys tomorrow. We'll see you in the NewsBeat live room over in Discord at the Market Bandits, and we'll continue to chop away at this and just tear it up. Stay consistent and keep it together, guys. Last word, Mitchell.
See you, everyone. See you tomorrow.